This is Forex Insights with CIS Trading at thinkorswimtoolkit.com. In focus is the euro and the Swiss franc. As mentioned on March the 1st in a video I published on CIS Trading YouTube, we have this bearish candle where for an extended period of time we have traded and oscillated between the range of the high and the low of that candle. One reason for that on a daily chart is we have broken down from an uptrend into a downtrend. And after we broke down into that downtrend, that's where we've consolidated in this range for quite some time. On this daily chart, we show a buy signal on our price action metrics. However, they're very shallow, and part of that's because of the extended period of range-bound trading that we've had. We still show a buy signal also on our chart analysis metrics. Our momentum, however, over the last day has broken down through the top line and is again showing weakness here. When we look at this on a monthly chart, we can see that the euro Swiss franc's been in a downtrend for quite some time on a monthly basis. However, the last two lows of that downtrend have been followed by extended periods of consolidation. With a bearish trend and sell signals on our price action metrics, which have been the case for quite some time on a monthly basis, we've maintained bullish momentum metrics, but price has not responded to those metrics yet. So on a monthly basis with a downtrend and those sell signals on our price action metrics, we only have about a 20 pip range before we enter into a sell condition on our monthly chart as far as our chart analysis metrics. Any move higher out of this Swiss franc, out of this euro versus the Swiss franc, would provide us an opportunity to potentially short this again, at least short term, until something significant changes. When we look at this on a weekly basis, we have a buy signal condition on our price action metrics, and we show a buy signal condition on our chart analysis metrics. Our momentum, however, has peaked at 100%, and although it can stay in that range for an extended period of time, typically that's when we begin to look at that to break down through that top line and signal a sell. Here's our concern. With this euro Swiss franc, one reason for the range-bound trade is a confluence of conflicting signals, and one of those is this bearish candle where we have an inside bar. That's an arrowhead reversal pattern where you have an outside bar, an inside bar with this top tail doji, and another inside bar, again a top tail doji. Typically this is a bullish reversal pattern showing a move higher. If we were to have a significant move higher, my concern is that it won't last, and this is why. When we look at this on a daily chart, once again, if we move higher, once we get up to the 115.80 to 116 area, we are back at a trend threshold area that is going to most likely create some selling pressure. One way to look at this is to look at the British pound and the Swiss franc. When we look at the British pound and the Swiss franc, we can see that we have this bearish spinning candle once again where we've oscillated within the range of the high and low of that candle. Last week we made an attempt to break out through the high of this spinning candle. When we did, we broke down, came all the way down through that range, pierced the low, and closed back within that range again. So when we look at this euro and the Swiss franc move to the upside, we're looking at potentially selling until something significant happens with the US dollar, Chinese yuan, or we have some significant confirmation of an extended move to the upside or to the downside. With the euro Swiss franc, once again, we have a bearish condition. This is CIS.